Right, it looks like we're at time, so let's go ahead and get started. My name is Chinda Chun, and I'm with NACVA and the Consultants Training Institute. Before we get started with Around the Valuation World today, I want to go over a few housekeeping items. First, to obtain CPE credit, you must answer all the poll questions that pop up on your screen during the webinar today. CPE is available to subscribers to AVW, and CPE service will be available on your NACVA.com portal within 7 to 10 business days after today's webcast. There's our disclaimer for our show today. If you have any questions during the webcast today, please use the Q&A feature in Zoom. Those will be directed to the presenters. If you have any technical questions or questions about NACVA, please use the chat feature. Those will be directed to me. And again, there's the link to subscribe to the CPE for AVW. So feel free to click on that and let us know if you have any questions about that. With that, I'm going to turn the time over to Mel and Alina, who will get us started today.
Thank you, Chinda. Welcome everyone to this month's program. We've got another great program. These are the correspondents here. And if we just look at the program lineup today, we're going to start off. I'm going to have the honor of introducing once again, Michael Gregory with Industry Headlines, one of the meatiest elements of what we do here at AVW. And then Stephen, we're going to talk about calculating reasonable comp issues in valuations, and then move to family law engagements in the changing landscape. And then we bring in one of the most popular segments, which is with our judges, to talk about settling a case. And then we'll get a standards update. And then we'll spend a little time figuring out, how do we build our practice? What are the things that we can do to make that happen? And so with that, let's introduce our first presenter, which is, he's no stranger to AVW. He is one of the regulars. Michael Gregory was prior profession, prior world in the Internal Revenue Service. Now leads mediation, negotiation, and other engagements. He's written a lot of books. I've lost count, and he's doing a lot of speaking and consulting out there. Michael's segment is going to walk through some of the key headlines in the industry for the last month, the things that we need to dig down deeper and look at. Michael, you there? Welcome aboard.
I am. Thank you very much.
Good to have you, my friend, again.
Thank you, sir. Well, we're going to talk about 7 different articles really quick. Mercer examines the future of the BV profession. Kroll lowers the recommended ERP to 5.5%. Bowerman gives BV recruiting insights on the AICPA podcast. The tide has turned, and somewhat, for ESOP valuations. New name for FactSet merger stat review. Value-based billing gains steam at BV firms, most popular approach now. And private company EBITDA multiples are down again in the first quarter of 2023. So in terms of objectives for today, we're going to assess the future of the profession, at least according to what Chris Mercer has to say. Identify the new lower ERP according to Kroll. Choose how to recruit according to Bowerman. He's got a nice 25-minute video, and I'll present that in the summary here at the end. Interpret the changing ESOP valuation environment. Identify the new name FactSet merger stat review. Recognize increased value-based billing at BV firms, and compare private company EBITDA multiples so far in 2023. Well, Chris Mercer, he provided a nice quick read. I suggest you download that. It's a good read, white paper. He says something's gonna shake out between AICPA, ASA, and NACVA, but there won't be one single valuation standard given the reason for the different standards. And he says the next generation of appraisers are gonna cast off a number of the old concepts and place a greater emphasis on relevant theory going forward. And there will be more consolidation in the profession with ownership transitioning, especially with a lot of the gray-haired people like me moving on and what may happen going forward. Kroll lowers the recommended ERP. It's lowered it from 6 to 5%. They recommend you choose the risk-free rate, either the spot rate or at a minimum 3.5%. So I just looked this up today. The spot rate right now is 4.55%. Last year at this time, it was 3.35%. And the long-term average is 4.33%, putting things in perspective. And they also have information on the Eurozone, and depending what country you're in, it ranges from 5.5% to 6%. Borman gives BV recruiting insights at the AICP podcast. He's been doing this. John has been doing this for over 25 years, and he strictly works in the area of BV. So you really want to listen to him with some confidence because he knows his stuff. He's recommending you get out and hit the college campuses. He said, basically, the college students don't know who we are, and most of them don't have a clue, so you've got a real opportunity there. He suggests reaching out to your local network with college professors, and he has said they like to hear you come and speak, so you're a real opportunity for the college professors. He said the perfect storm coming with what he's referred to as the silver tsunami and the post-pandemic labor situation. So check out his, 30-minute podcast with Nini Gianfala, and I've got a link to that here in the back. The tide has turned somewhat for ESOP valuations, and that's because of a particular case. That's the Bowers case, and we featured it on here previously. But overall, the number of ESOPs is declining. There's two very good sources here with the National Center for Employee Ownership in NCEO and the ESOP Association. Two good resources. I have links to those at the end here too. The gift state purposes is why many ESOPs are done. The projections are the most scrutinized area. That's what gets critiqued by the Department of Labor and by others in terms of litigation. So there are more cases that are going to court. So when we talk later about how can you work to avoid cases going to court, the expert witnesses, that's right on point with this concern. And the Department of Labor and private plaintiffs do not favor control premiums. It's suggested that you handle this with your cash flows if that's possible. The DOL has said they're going to reach out to the appraisal organizations with their new regulations. Now, I've said that before, and it hasn't happened. Given the Bowers case, they're making headroads. How's that? We're making headroads to address this going forward. So our organizations, professional organizations, may very well be reached out to assist them as they come up with new DOL regulations. The new name, MergerStat, is now gone. It's FactSet MergerStat. It's the new name. 2023 editions now available. It's data through 2022. In 2022, it's declined a little bit. You can see the number, 15,734 transactions. Still a lot of transactions. And it's likely due to the increase in interest rates, according to the author of this article. Value-based billing gains steam in the BV field. And I know this myself, and I'm just passing this on to you. 57 respondents use this method compared to 35% in 2018. So it's gaining strength. The question is, what would your value-based billing be? And I suggest you just do some internet search on value-based billing if you're not familiar with that. And 13% use value-based as a primary method. In other firms, primarily fixed fee and hourly billing. I was an hourly billing guy. I now look at value-based billing as an alternative, depending on who I'm working with and given client. Private company multiples are down a little bit. I can see on the chart on the far right, it's down to 3.0 in the first quarter, and the overall moving average, looking at 3 quarters, is down to 3.5. Here are some additional resources for you. Mercer examines the future of the BV profession. Here's the 30-minute podcast with John Bowerman and Nina Gaffini relating to recruiting and hiring. The National Center for Employee Ownership and ESOP Association are two good sources for ESOPs, and those are presented here. And here's the way to obtain the FactSet, the new MergerStat review at $679. And then each month I come on board, I review through these various types of sources, and this is my contact information. And feel free to reach out to me either by email or by phone. I usually get 2 or 3 calls or emails in the course of making a presentation like this. It's my pleasure to help. There's no charge for this. I'm happy to help. And with that, I'm going to pass it back to Alina and comment. We've got an excellent session coming up next with 2 of my favorite people related to reasonable compensation. So with that, I'm going to pass this back to you, Alina.
Thank you, Mike. For everyone, you have your polling question now, so make sure you respond to that. And as Mike mentioned, right now we'll have Stephen White that he's going to be presenting, Stephen Kirkland and Paul Hamann, and they are going to be talking about calculating reasonable compensation for business valuations. Stephen is one of our correspondents, and he's the managing partner and founder of Onyx Partners. So, Stephen, are you there?
I am here. How are you?
I'm doing well, thanks. I'm glad that you join us.
Yeah, it's amazing technology. You know, we've been dealing with this for years and you still have issues time to time, but I'm here now. I am here now. And I'm glad to be here because we do actually have, as Michael mentioned, we do have a very exciting topic that we're covering today. But before we dive in, I want to introduce our guests today, Paul Hamann and Stephen Kirkland. Stephen is received his bachelor's degree in administration from Emory University and Master of Tax Accounting over at University of Alabama. I know a lot of you are familiar with him. He is the founder of Atlantic Executive Consulting LLC, where he is a compensation, tax, and financial consulting, serving closely held business for nonprofit organizations that expand across the entire country. He also is on the board of directors of an investment advisory firm, which I think one of the things that is pretty more interesting and exciting about Stephen is that he's also been an expert witness in more than over 200 cases involving compensation issues, including 4 cases for the Internal Revenue Service and 1 for the U.S. Department. Now, Stephen is also going to be joining us today with Paul Hamann, who is an expert in determining reasonable compensation for closely held business owners. He's educated over 100,000 tax advisors, valuators like myself on topics of reasonable compensation, has been published in a numerous amount of national as well as state journals. Paul founded RCR Roberts Reports in 2010. RC Reports cloud software determines reasonable compensation for closely held businesses and is used by CPAs, EAs, tax advisors, forensic accounts, attorneys, as well as valuators when they need to determine reasonable compensation. So gentlemen, how are you? And welcome to Around the Valuation World.
Great, Stephen, thank you so much. Good to be here.
Not a problem. I think before we dive in, for the very few people that may not be familiar with RC Reports, maybe you can give us a quick little synopsis of exactly what is this. I know that you have your monthly subscription for those who subscribe to us today. I think are fantastic. Before we dive into your presentation, give us a little synopsis of exactly what is RC Reports.
Yeah, RC Reports is really a very simple cloud-based piece of software that valuators can use as a tool when you needed to come up with that reasonable compensation figure for a client. It's how I got to know Stephen. We originally built our software for the tax world, and the valuation world found us pretty quickly in our evolution. And so we got to know Stephen and a lot of other folks that I recognize on today's session, gave us a lot of good feedback. And we upgraded 8 years ago now to include a lot of different tools and data sets specifically for the valuation world. And so we can just provide that number real quickly, real accurately, and real defensively.
And as I stated in your bios, this is something that not just valuators, but on a host of other professions find this information to be extremely, extremely valuable. So thank you very much. And Stephen, unless you wanted to add something in, we can go right into the presentation as well.
Okay, yeah, thank you. And I'll add to that. Yeah, there are a lot of different scenarios where we need to normalize compensation. One obviously is business valuations. And then of course you have the tax-driven situation. And then just in general fairness. Business owners, for example, if they want to pay themselves fairly to be fair to the other shareholders, they have a need to know how much they should be paid.
Right.
We'll Paul, I'll let you advance the slides, and we'll talk a little bit about how the any normalization adjustment to an owner's compensation has a dramatic impact on EBITDA. And I don't do business valuations, but most of you do, and you know that typically the estimated value is going to be greatly affected by the EBITDA or some version of EBITDA. And so when we make a small adjustment to owner compensation upward or downward, it has an effect on EBITDA, which has a dramatic impact on the estimated value if you're multiplying that EBITDA figure by some multiple, which might be 5, 10, 15, whatever the appropriate number is. You can see it has a dramatic impact on the value. And so in some cases, the normalization adjustment for owner compensation is the largest normalization adjustment in a business valuation. I personally think it's also the most interesting. It really leads to some really lively conversations with the business owners about what they do and what brings value. And so it can also be one of the more sensitive issues because it's something that people can really take personally. But I'll let Paul go ahead and address some of the most commonly accepted methodologies for determining reasonable compensation.
Perfect. Yeah, Stephen, if you can advance that slide for us, I'd appreciate it. And I'm going to have Stephen K. chime in here a little bit on these as well. But the three commonly accepted approaches are also outlined in the IRS job aid on reasonable compensation that was championed by Mike Gregory. So we may have him jump in here at any point in time he'd like to add some content as well. But these three approaches were memorialized in this job aid that Mike was not only championed and helped build, but he's the reason we have it. He filed the Freedom of Information Act to get this out to all of us. But it was a huge help because before that, we had different approaches and methodologies to think about, but not all of them were very well memorialized or accepted. And ever since this has come out, these three are pretty much it. Pretty much everybody realizes that one of these three will likely be your primary, and sometimes you might use two or three depending on your scenario, severity of the case, that type of thing. And that's where we'll get to be able to get into some real practical scenarios with reasonable compensation when Stephen maybe shares some war stories or maybe even Mike Gregory. But the market approach or the industry comparison approach by far is the most common approach when it comes to determining reasonable compensation in the valuation world. And as its AKA industry comparison approach indicates, really, this is where we're comparing not only the owner of the company, but also his business to his peers. And we're trying to come up with what that reasonable compensation figure would be, looking at both the business and the owner. The market approach or industry comparison approach. And this approach from an RC reports perspective is the one that we see valuators use the most. And we also see it used the most for what we think about when we're talking about SMBs as the approach we see mostly for what we kind of think about as that medium-sized business where the owner's predominantly in a executive or management level position. There's a couple of practical reasons for that. Industry specific wage data is incredibly rare and hard to come by in amounts large enough to be credible. And I think Stephen's going to talk a little bit more about the credibility of wage data sets here in a few minutes. But for us at RC Reports, those areas are areas where we can gather that data large enough so that we can put out a credible and defensible figure. The cost approach, I like to kid around. The cost approach is what I think about as kind of the Rodney Dangerfield of approaches. It didn't get a lot of respect early on.
I'm going to have to use that one again.
It didn't get a lot of respect early on. And it's also known as the many hats approach. And it has gained a tremendous amount of credibility and popularity over the last 10 years, especially for what we think about as those micro or really small sized businesses. And these are owners that are wearing multiple hats for their business. And so really the best approach to figure that out is the cost approach. And so predominantly when you have reasonable compensation and you're looking at the approaches, you're usually going to gravitate to either the cost or the market. The income approach, it's out there. It's not used predominantly as a primary approach, especially in litigation and valuation. Where I kind of see it used is as a secondary approach to kind of back up your primary approach. We also see it used for what we call outliers, and these are just simply people that have such a unique occupation that we can't find comparability data. And the income approach is the only approach that doesn't use comparability data. It uses a very simple formula. But most all data primarily is determined using either that market or cost approach. And Stephen K., if you could just add in here a little bit more about the differences when we say market cost and income in reasonable compensation, not a parallel to the valuation world.
Yeah, there certainly are some differences. And with respect to the market approach, which does take into account industry, I think that what we'll see going forward is less emphasis on the industry. And there's a couple of reasons for that. Our world is changing so fast. One is that companies do not stay in one lane anymore. When I started doing compensation consulting back in 1995, a company would either be a retailer or a wholesaler or something else. Now companies that sell the proverbial widgets probably do both retailing and wholesaling. They may also do some manufacturing or some processing. And you can imagine with somebody like Uber, who says they're not a transportation company, or Costco, are they a wholesaler or a retailer? You could make an argument either way, I think. So I think that the industry is going to play a lesser role going forward. And then with respect to the cost approach, of course, you do need to break things down. That's where you really disregard the title that somebody has and you find out what do they really do. They may say they're a vice president, but you've got to look beyond that and find out how do they really spend their time and what do they really do that provides value. And then the income approach is certainly a interesting way of going about it. The presumption is that if the company is making a good return after the compensation has been paid, then the owners are not overpaid. And then, of course, with comparability data on the next slide, comparability data is very, very important. And you cannot ignore it, regardless of what approach you use. You have to at least consider the compensation comparability data. But Paul, I'll let you talk about that a little bit.
Yeah, and Stephen has some great tips I'll have him share as well. But one of the things when Stephen is talking about comparability data is to read the fine print, not an issue that most expert witnesses and evaluators have any issues with, but look to the credibility of the data sets and how they were not only gathered, completed, and published, but also what were they designed to do? And generally those details will include that. And Stephen's read more of these than most, but just a quick background on RC reports. We have looked at, I don't know how many data sets years.
Oh, we lost you there.
Paul, we can't hear you.
Something may have happened on his end.
Yeah. Okay, go ahead, Stephen.
I'll pick up until he can rejoin us. But
okay,
you see the second bullet point there is use reliable data sources, which of course is very, very important, regardless of whether you're benchmarking compensation or anything else. One of the advantages of RC reports is that they do get a lot of their data from the U.S. government, from the census, and the Department of Labor. And then specific data is better than broad data. And what you might think of in terms of that is if you use
mic test,
for example, RMA. Paul, you there?
I think so. Am I back?
yes,
Yeah,
you're back. You're back.
All right.
Yeah, I was just filling. Let me finish this thought about RMA. So they'll give you a percentage to say that companies in a certain industry and certain size categories spend, let's say, 3% of their gross revenue paying their officers, but they really don't give you enough detail to use that, because you don't know, do they have 2 officers or do they have 6 officers? There's really not enough information there. And that's what we mean by using specific data rather than something very broad. Now, I'm not just trying to criticize RMA. RMA might be wonderful if you're benchmarking something else like debt to equity ratio or some of those kind of things.
Right.
But it's typically not the best source if you're benchmarking officer compensation.
I was actually going to ask you about that because, as you know, as evaluators, that's one of the tools that we utilize quite a bit. And there is a component there for looking at officers' compensation there. And I wanted you to break down and give us your thoughts as far as looking at the differences between the two. Yours is substantially more detailed and more robust than looking at just from the data points of a collection of companies in that particular size, which is what RMA will essentially do as well.
Yes, and I'm going to let Paul respond to that. But again, some of the tax court cases have criticized RMA in this specific area, partly because the percentage varies so much. You look at one industry and one size category, and it might say they spend 1% of revenue on officer comp, but the very next year that might jump to 3.5%. And there's no explanation. How do they go from 1% to 3.5% from one year to another? So there's some fairly broad variances there that we can't explain. So again, RMA might be wonderful for benchmarking other things, but it's probably not the best for officer compensation.
Paul, are you still there?
I'll just
Oh.
add in here for, I'll just add in here for just a quick comment.
Uh-huh.
The IRS job aid lists the number of data sources. And Stephen, you have dozens of data sources and you know the ins and outs of those. You're an expert in the area. The IRS job aid actually recommends not using certain sources, or if you're going to use a source, they recommend using multiple sources because they have concerns about some sources. So that's an IRS commentary that you just want to take into account here too. And with that, I'm just going to pass it back. Just add that in as a piece of info.
Thank you, Michael.
So, yeah, great job aid. If you don't have it, do a quick Google search or hit Mike up for that link. It is a good piece of reference information. Not sure when my mic went out. The point I wanted to make about RC reports data sets is they're highly vetted. A gentleman named Bill Schneider, who heads that up, makes sure that all of our foundational data is collected scientifically, methodically, and all the data that we eventually publish meets a very, very high standard, because we built RC reports to be part of audits and litigation. And kind of a fun side project I've been working on here lately, we've been trying to compile all of our audit and litigation experience over the last 10 years. And it's really pretty cool to kind of go through those. And Stephen's been part of a number of those and experience in some of those. So it'd be fun to see if we have time, if Stephen has any of those either built in or might be able to share some of that actual war stories from the front line, so to speak.
Yeah, I will mention very briefly, now, just to be clear, I'm independent of RC reports, so don't hold them responsible for anything that I submitted. I'm independent of that, but I am a subscriber and have been for years. And one of the things that I like about it is it allows you to adjust for someone's proficiency. Typically, we look at someone's years of experience, but years of experience is really a measure of proficiency. For example, if you're hiring somebody from your firm, you might ask them, how many years of experience do you have in preparing business valuations? And there's a big difference in what you'd pay someone who has 6 months versus 6 years of experience. But really, it's not the experience you want, it's the proficiency. And that's something that you're able to adjust within RC reports. Mm-hmm. But with respect to these tips, I know we're running short on time here, and I want to cover this. Keep in mind that the adjustments to compensation might be very personal, and quite frankly, that's one reason why some BV people have engaged me to address that issue, because they don't want to hurt their own relationship with the business owner. But also consider family members. When you're normalizing the pay for an owner, you also need to look at the family members, and that's where it can get really personal. If you go to a business owner and say, hey, you've got your grandchild on the payroll at $100,000 a year, we don't think they're worth anything anywhere near that, you can see that gets fairly sensitive. And then also be aware of deferred compensation. When you look at how much somebody was paid in one particular year, that might not be the total picture. It might be that they have some sort of non-qualified deferred comp that they're going to receive later, or perhaps they received some non-qualified deferred comp in that year that they had earned earlier. And then also with respect to covenants, it's very common for people to sign covenants, even at closely held businesses, non-disclosure, non-compete, that type of thing. And I'm not a lawyer, and I'm not going to give you legal advice, but what a lawyer might tell you is that for something of that nature, some sort of contract to be binding, there needs to be some consideration paid, and it's only fair that there be some consideration paid if it is in fact an enforceable covenant and the person is complying. And then let's move on to the next set of tips, which deals with professional goodwill. I'm not going to tell you all what goodwill is, you know very well. My point here is, don't just wait and address goodwill when the business is being sold. Typically, you look at it at that transition point to see, is it transferable? My point here is, it's part of their compensation. It's probably part of your own compensation. That's probably part of the value that you bring to your firm, is the professional goodwill that you have. And then personal guarantees are very common at closely held businesses as well. That is a compensable service. If someone is guaranteeing an office lease or a line of credit, something like that, It becomes an issue when there are multiple owners, but only one of them is guaranteeing the debt. You can understand they would want to get paid something. And what the tax court has informed us is that they have to demand that compensation in advance. There has to be an agreement in advance. It should be documented. And they have to be paid amounts that are in line with what similar companies pay for similar guarantees. And then also another way to benchmark compensation is to look at prior positions. The idea here is you could, if you want to see a tax court case that deals with this, you could look at Choate Construction Company. Miller Choate started his own company, and I testified in that case, was able to show that he was paid a certain amount by his prior employer that he did not control. And there's a presumption that if he was worth, let's say, $500,000 a year to that company, that he must surely be worth at least that to his own company. And then internal comparisons, I had a situation where the IRS was challenging the compensation of a CEO, and they wanted to reduce it to a level below what the CFO was paid. And I was able to use the CFO's compensation as sort of a floor to say, it doesn't make sense that the CEO would be paid less than the CFO. And I was successful with that. And then we'll move on to another tip that I have for you concerning compensation consulting. I am a compensation consultant, and it probably seems a little bit odd to you that I would try to encourage you to compete with me, but I really am. I'm going to encourage you to consider compensation consulting as an additional service of your firm if you're not already. Through RC reports and other sources, you can obtain the comparability data, and you can offer that to your clients, assuming you're not in an expert witness role. You don't want to become a consultant, obviously, if you're in an expert witness role for somebody. But it's also a good way to reach new clients. And let me tell you why it's a good way to reach new clients. Assume there's a company across town that you're aware of and you want it to become a client. You can contact them. If you offer to do some sort of compensation consulting or provide comparability data, that can lead to an opportunity for you to interview some of the key decision makers at that company. You can interview the officers or the shareholders or the directors or some of the key decision makers in order to fulfill that project. So in effect, what you're doing is getting paid to make a sales call, really. And so I would encourage you to consider that as an additional service, particularly if you have a slow season. You might want to consider it at that time. And then some words of caution. Keep in mind, when you prepare a report and you, excuse me, you normalize owner compensation, you're putting that into a written report, and you never really know who's going to see that. If it's a report that's going to be supporting a Form 706 or 709 to the IRS, then you are expecting the IRS to see the fact that you're saying somebody was overpaid or underpaid, which could trigger some sort of tax adjustment. And then also, if it's an S corporation, that when you adjust compensation, you could create a disproportionate distribution. And you probably know that with S corporations, all shareholders are required to have equal rights to distribution. So if you're creating a disproportionate distribution, that could create an inadvertent termination of the S status. And then also be aware of shareholder disputes. Here's a word of caution that I'd have for you. In your engagement letter, you might want to put a provision that says, after your engagement is completed, if somebody contacts you later because there's an audit or there's a dispute among the shareholders or whatever it might be, and you get drug into it, you get a subpoena and you have to provide your work papers or you have to give a deposition or attend court, you want to get paid for that time. And that is entirely possible, because it might be that when you do a business valuation, everybody's getting along really well. But 2 years later, there might be a dispute, and somebody remembers that BV person said that Joe over there was overpaid, and all of a sudden you become a witness in a dispute. And hopefully you can get paid if that happens. And then, of course, lenders, when a company gives financial statements to the bank really wants to be sure those are accurate. And when you make adjustments, you might be telling the bank, hey, those financial statements you were given weren't really accurate. EBITDA wasn't really what those financial statements said it was. And so just be aware of that as well.
All right. So it looks like we're down at the end of our presentation here. Paul or Stephen, do you guys have any final comments that you would like to share with the audience?
I'll let you go first.
I wanted to find out if we had I think we have maybe another 5 minutes or so that you wanted us to run. If so, I'd love maybe some war stories or commentary from either Mike and or Stephen. I know Stephen's worked with some other NACFA folks recently on a joint case, and it's just, I think it can be really helpful to kind of see how these things are playing out in real life.
Yeah, it is. Obviously, compensation is a big issue in marital dissolution, not just in a business valuation setting, but I've had a couple of situations that I can give you. One in which there was one spouse was a CPA, but had not been working in years. And so what happened was the court wanted to know, what could this person be earning? What was their earning potential if they did go into the workforce full time? And I was able to extract that data from RC reports. And then another situation, also a divorce, one spouse was working, but not working full time. And the position they had was maybe more of a hobby than a job, even though it did pay. So again, the court wanted to know, what would this really, what could this person really earn? And so that's really more of an issue of earnings potential. But also shareholder disputes have become very, very common. When I began doing compensation expert witness work, most of the cases were tax driven. Now they're more shareholder driven, where you have a business that's owned by 3 people, 5 people, maybe they inherited their interest, maybe they went together and formed the company. And at some point, compensation becomes a dispute, and it tends to escalate and get ugly pretty quickly. And so I think that's where, if you're offering compensation consulting services, you might do your client a huge favor if you can help them prevent that type of ugly dispute, because it does become very distracting. It affects the morale of the workforce. Sometimes the clients or customers find out about it. Of course, the legal fees are expensive. So it's nasty in a lot of ways. And some businesses never really recover from that. So if you can provide some compensation consulting and help prevent a shareholder dispute, you're really doing them a huge favor.
And I'll just comment that when I work for the service, you can't recommend any firms. That's a policy at the IRS. I'm in the private sector now, and I can tell you a real sweet spot for RC reports is firms that have less, and you can correct me if I'm wrong here, Paul, but firms that have typically less than 250 employees and typically less than $50 million in revenue. And that's like a key area for them. And if you apply the methodology appropriately with the interviews of the folks at the firm, it's an excellent source, and the service recognizes that as well. I'd also comment that when the different approaches were presented, the income approach typically isn't applied because it requires a fair market value both at the beginning of the year and at the end of the year. But with high level compensation and larger firms, that is used, but typically not with smaller firms, because the firms don't want to pay for 2 valuations at the beginning and end of the year. Now, if you think about this relative to ESOPs, you have that with an ESOP, so it might be far more applicable there. Those are just some, and I'll just comment, I was on a case with Stephen Kirkland, and was with the IRS, and Stephen was an excellent witness, and we were able to resolve that case with the IRS, where the IRS in that case did not use multiple sources like they recommend in their job aid. And instead, with what they used, we were able to resolve that case with the IRS, with the case manager on the case, because of the due diligence that was done by Stephen. So just some sound bites there. Back to you, Paul and Stephen.
Thank you, Mike.
Nope, I think that probably wraps up our time. I don't have anything else unless there's some questions you'd like us to answer live.
This is Mel. I'm going to throw a question out there because it was mentioned, this whole idea of normalizing adjustment with salary triggering a comp issue or a S corporation kind of a differential. When we're making these adjustments, they're economic adjustments. They're not a claim of excess compensation. But are you seeing them? Are you seeing them come at it from that perspective now?
Yeah, if you're asking me, yes. And the reason is that the methodology that you would use in a business valuation is so similar to the methodology that the IRS would use for tax purposes. Now, granted, something can have 2 different characters. Like a classic example might be a lease. You can have a capital lease versus an operating lease, and it might be different between tax and book. And the same could be true with an adjustment to normalizing owner compensation. But generally, if you are signing a report, maybe you've got a number of initials behind your name, CPA, CBA, MEFF, and so on, and you're signing your name to the report saying that you believe this person was overpaid, then probably other people are going to pick up on that. they're going to use that as an exhibit, whether it's an IRS audit or a shareholder dispute or whatever it might be.
Okay, good. Well, that means that we need to tell them to work for their due.
Yeah, and I understand you might not intend it to be used that way, and you might even say in your report that the report is prepared only for a very specific purpose and it's not intended to be used for other purposes, but that doesn't necessarily mean people aren't going to use it for other purposes. But that's a great question, Mel. And if you go to the next slide, I want to point out something. We're going to have a session in Fort Lauderdale on December the 15th at the NACBA conference down there, slightly different from what we're talking about now. At this point, we're going to be talking about defending compensation amounts after they've been paid, and after an issue has come up, whether it's in litigation or an IRS exam. And so that'll be a 2-hour session, and I hope you'll join us down there on December 15th.
Got it. Thank you, guys. This was an incredible session, and we're going to follow it up with another incredible session. I think it's dynamic with Cheryl. Hyder is going to introduce her guests, but we're going to talk about divorce and the changing landscape in family law matters and divorce matters. Cheryl, you there?
I am.
All right, I'll let you take this away.
All right.
And because I know that you have a lot of stuff to share with us.
Yes, we do. I get the screen going first. There you go. Y'all should be seeing Lili and Michele. Okay. So I want to thank everybody for joining us today, but most importantly, I want to thank my two guests, Michele and Lili. With your help, ladies, we are going to shine a light on how the profession has changed somewhat since some of us started doing this stuff. We're lucky enough to have Michele here. Michele, her professional pathway toward where she landed now. She's now a CVA, math, CDFA, and an RIA, but her pathway started about 20 years ago before she discovered she had a passion and a knack for helping financially dependent spouses navigate these rough waters. At this point, though, she's achieved these additional designations in addition to being an RIA, and she's also testified in court several times in several different jurisdictions. Now, Lili has a practice that's focused on financial planning, the separate niche carved out for divorce advisory services. And after she completed her Stanford University London School of Business Executive Management program in international investments, she picked up NACFA's math designation in addition to acquiring her CDFA and also the rather intimidating CFP. Lili has received accolades in appreciation for her years of service to her professions, and she's got a list of accolades a mile long. She's also provided expert testimony in different jurisdictions, and has also contributed several books on the subject of financial planning and divorce, as you will see. So, my ladies, the reason we asked you both here is the times have changed since family law and, financial machinations became more of a thing, if you will. So the big question for you both is, how do you think, or what do you feel has been the most disruptive change to your individual practices? Lili, you want to take this first?
Sure. First of all, thank you for having us. I think it's absolutely an essential time to have the focus of experts on this particular professional arena, so to speak. What has impacted, I believe, our practice the most is the turn and focus now toward financial experts. We are now looking at the greater use of alternative dispute resolution, which invites us to the table, which has not necessarily been the case in traditional litigation, unless you have been an expert in the sense of writing a report or testifying in court, and not really part of the process itself. The second part to this is that more and more individuals are looking for a much more comprehensive, holistic kind of divorce and outcome. And we really play right into that in the sense of looking at 360 of what's happening with the family. And Michele, I'll leave it to you on the second part.
Well, I'm going to piggyback off what Lili said. In addition to those of us needing to come to the table, we're needed more so because assets are more complex than they've ever been before. There's new layers that aren't typical that we've seen in the past 10, 15, 20 years. So those of us that have the expertise in certain areas, we're needed to be able to explain to the courts or to what they're actually looking at so that clients can divorce smarter and they are more empowered with just information about what they actually have.
Okay. I like that. So, Michele, you just mentioned something about distributing marital assets. And I don't think we have a situation where I get an asset and you get an asset and everybody gets an asset. There's a case where, or there's been very few cases rather, where I've been asked to help an attorney out and there hasn't been some kind of an ED component. I'm sure that's been the case for each of you as well. Now, how have the changes in the demographics alone impacted how you both approach your work? In other words, we're talking now about what I think Lili penned, the grade divorce. So considering that we're dealing with that now, how has that changed the way you approach what you do?
How about if I kick it off and say it's surprising that statistics now show there's only 1 in 5 families are your traditional nuclear family. So our family structures have vastly changed. You have blended families, you have same-sex families, you have people cohabitating together, you have half siblings, step siblings, surrogates. It's a very blended, different kind of melting pot of what you call families. That's the first piece. The second piece to this,
just to interrupt you, that's why we use the word amorphous here.
Exactly right.
It's continually changing.
And you hit it on the head. The second part to this is that equitable distribution or equal distribution will depend on your state's divorce laws. So there are a number of factors that each state will enumerate for what they consider and weigh toward the distribution of marital assets. And it will include factors such as what we have listed: length of marriage, your number of dependents, earning capacity, health, age, etc. What's interesting about this is we've inserted the number of marriages as being another factor that impacts how ED is looked at, because we know from research again that there is that standard statistic of about 48% of first marriages end in divorce. It's even more gloomy for the second marriages, which are 60%, and even more gloomy for those who are optimistic and happy to remarry the third time. And the statistics are at 73% end in divorce. So we're looking at remarriages, we're looking at living alone, we're looking at, cohabitating. All of this brings complexity to an already more complex financial situation. And Michele, I hand it off to you.
Michele?
I would agree with all of that. Just again, couples are living together and therefore going marriage altogether. We're also seeing people delay when they're getting married, which is changing the dynamic of the divorces in a domino effect. And also people are living longer. Medical profession and technology is keeping us alive longer, which again, and we're looking at dividing out assets. Now there's a risk of someone running out of money, of not actually having enough money to even pay their bills, even at any type of ED.
Well, I think we're going to cover that next. So hold that thought, Michele. We're going anywhere. So the other major question, obviously, is about helping figure out income for alimony purposes. So I know we talked about each of those topics at conference, but there is more. Lili, tell us more about these topics and how these are becoming more of a concern.
There's always more. You have to always pull back the covers.
Yep.
The pandemic really struck people very hard.
Mm-hmm.
And I would say that many people were involuntarily retired, and or the part-time wage earner suddenly became the primary wage earner, or you've had people who are desperately seeking work because they are on the cusp of retirement, going through a divorce, and this happens to be that tsunami of gray divorce. And they're realizing that cash flow is an essential piece of what's going to keep them alive, right? And meeting their needs. So working past retirement is a big factor in any consideration of divorce. And interestingly, many states are moving the opposite way. They're looking to terminate terminate alimony at full retirement age, regardless if the spouse continues to work or not. So that's a big change in sort of the, I would say, horizon of what clients' expectations are surrounding long-term marriages and then divorcing later in life. A court usually cannot compel a person or a spouse to continue to work. They can order support, however, and then it's up to the obligated person to determine where the support will be paid from. Social Security are very tight rules around the IRS as to what a divorced spouse can and cannot do. Where the nuance lies is when you have a very large age disparity between the spouses, because one spouse may be far behind retirement age and the other spouse older. And this happens when it happens to be the primary wage earner or the higher wage earner is younger and then their spouse. And secondly, claiming strategies. Sometimes people will have an early claim on their benefits, which then impacts their spouse. Modifications, there's always changes. People are always itching to see what they can do to change their situation. And I have to say, it really comes down to whether or not they've done an excellent job at the date of divorce or into the date of divorce of quantifying their standard of lifestyle. That's what we do. This is why it's so important. There's a fallback. You go to where the date of divorce was and look at their financial circumstances. And then if they're seeking to modify, you have to do a comparison. And or if they're looking at perhaps modifying on the basis of contrived circumstances, we're digging deeper, right? So usually if you're a business owner, you're going to cry, oh my gosh, the economy has hurt me so badly. I don't think I have any income at all. Or if I'm selling my practice and I want a succession exit, it's really not worth anything away from me, et cetera, et cetera. So having a backstop of where their financial circumstances were at the time of divorce is absolutely paramount. And client expectations, because we are seeing this rise in late life divorce, imagine this. There are so many studies out there, but generally they all fall down to the fact that less than half of our population has actual savings or retirement plans on the cusp of retirement, less than half. And then second to that, only about a third have any idea of how they're going to live through retirement years. And going back to Michele's comment about longer life expectancy, we're in trouble. So if you're expecting alimony to be half your length of your marriage and you're 63 years old looking at 65 retirement, it's not going to happen.
Might not, but it might. Depends on.
Good. And it's usually a big challenge.
Right. Absolutely. Michele, anything? Are you good?
No, I thought she did great on that.
Okay. Well, Michele, why don't you follow up and talk to us about how compensation evolves over time, what that has to do with divorce?
A lot of the trends and the changes we have seen are individuals, both from a executive level or from a business owner. There's a lot of different ways they're getting paid. There's more creative ways they're getting paid. You have to dig into that. And like Lili had made mention about the business owner crying that they don't have the money, we look at it as sometimes business owners can be underemployed, or they can be paying themselves much less than what they should because they're in complete control of their money. 20, 30 years ago, there were a lot more entry-level positions. There were a lot of people that were starting and they were making very meager amounts of money when the marriage began. And the trend now is they've now are entered into the executive level position. They're making six-figure incomes, and now they're going through divorce.
Right.
Other times, they are getting into a marriage at a much later day, and they're already an executive. So the dynamics of what they were making years ago versus now are very different. The entrepreneur or the business owner, there's so many ways that we can be paid. There's all the perks that are out there, whether it's HSA, whether it's vacation, whether it's, the previous segment mentioned deferred compensation. So one thing we as financial experts, we need to really dig in and really understand how are they paid? What ways are they getting paid? What are they taking out of the business in forms of compensation that may not be out there and transparent? We may have to actually dig into those records at all different levels.
And that is a wonderful lead-in, because with the great divorce, and you have folks who are higher up that ladder in terms of where they are compensation-wise and within a company. Now we have folks who are, earning that executive comp. And I think this is one of those areas that Lili is most in love with. So have at it, girl.
Well, I'm most in love with it because it's always fascinating to ask someone, as an executive, what's your compensation? They go, I don't know. Last hour, I get X amount. And inevitably, you have to go back to HR and start digging. And I'll give you just a quick story. I had a case where it was a CEO, and he had literally no clue as to all his perquisites or his compensation or whatever. And also, by the way, 10 years ago, he had his spouse sign off on a waiver to defer his bonuses, which he completely forgot, and he completely forgot. And of course, they would not be paid out until he decided to retire. So it was off the table. Nobody knew about it. Very fun. So I love this subject. So key points on this, whether it's a qualified plan or a non-qualified plan, whether it's, any kind of a form of an award, whether it's stock options, performance units, restricted stock units, each one has to be really dug into. And you have to look at a whole list of attributes to each one of these plans. And transferability and liquidity in divorce is really your key concern, in addition to valuation, as to how do we measure what this spouse actually earns, what they're entitled to, and what are we going to deal with it. So if I go in and start just describing a couple of things, I'm sure everyone knows this, but I just wanted to comment. Restricted stock has really been replaced, and as have stock options, more or less, with RSUs, restricted stock units. And it's a form of stock-based compensation. They all have restricted periods for trading. They all have a vesting period. And the vesting could be graded, or it could be cliff vesting. And once vested, it trades like any other share, and it's deposited in a third, party account like a Merrill Lynch or a UBS or somewhere. And the difference between stock options and RSUs as a form of equity compensation is that stock options will give an employee the right to purchase a company stock at a predetermined price within a certain period of time, a window of time. Right. On the other hand, RSUs are already grants of actual company stock, and they're given to the employee without any need to purchase. The company simply commits to it over a vesting period. And they're generally considered less risky, and it doesn't involve spending money out of pocket to obtain them. Performance units are a different kind of award, and the performance units are a company's commitment to give a targeted employee, usually an executive, a share of stock or cash equivalent at a future date when it vests. I would say that many companies probably give performance awards to their executives. Again, you need to ask. You need to read policy plans and find out from compensation. But the actual number of shares in a performance unit vary because it's based on value. There's a formula to the profitability of the company and to what that executive has brought in. And typically they're granted only to senior management. I'm going to say RSUs are really replacing a lot of these different kinds of deferred comp. And what you need to identify is sort of a laundry list, and the discovery may or may not be so easy. Valuing them may or may not be so easy. And they are available as an asset in divorce, as well as income consideration in divorce. Now, let me go through that a little bit quickly here.
Actually, we're going to have to come back to that. We have exactly 5 more minutes, and I promised Mel we would be on time.
Wow.
All right.
Okay. We'll have to do that as a whole separate course then for you guys.
Exactly. It could well be. So, Michele, why don't you talk to us about how the changes in the business environment for the 20 years or so that you've been doing this have changed the way you go about executing on a valuation project. So you have a business owner who has an interest in a business, you have to value it, come back to, what have you had to change? How have you adapted your processes?
Well, we have to figure out how did it get acquired in the first place? Because generationally, we're watching the silent generation transfer to the baby boomers. Baby boomers over the next decade are going to receive about $15.8 trillion of worth in just businesses. You have to understand, how are they getting it? Are they inheriting it? Are they actually purchasing it either with a loan or maybe with distributions they're actually receiving internally from the company? How is that happening? So that's the first thing we have to see is what's a marital versus non-marital potential position? How did they get it in the first place? And really to even see if maybe it's been transferred to them. Is it even viable? Did the transfer occur from one party to another during the divorce, and they're saying it's inherited when in fact it could be purchasing from dad or mom through distributions or actual income? That also looking at the different markets that are out there, because right now there's things we call the gig economy. That's your DoorDash, that's your Uber, that's your Lyft. It's a side hustle, so to speak.
Like you being a ref, right?
Yes, exactly.
What is it, D1? D1 football? D3, excuse me. Pardon me.
Yes.
That's a side hustle.
Something on the side, yes.
Exactly.
That everyone's getting paid for. So it's just, and internet businesses are so big now. So just really understanding what's the business, how are they paid, how is it working?
Right. So there's a few other noteworthy changes, Michele, that we were talking about previously that you guys have seen over time. Do you want to comment on these?
One of the biggest changes that I've seen are just really the shift in how people are getting paid and how actually they're shifting funds to other individuals. One thing is going to be really tracing the digital assets. We're watching a lot of things happen in digital. The other thing we're really seeing are the mergers and acquisitions of all the financial institutions, really getting to understand and uncover the layers of the tracing and really finding where the money started, where it's at now, and everything in between, because lots get lost in translation with all the M&As.
Well, with that point exactly, or specifically, how are you going about finding the initiating institution? You peel back all the layers after 40 years of marriage. I'm getting laughed at by Lili. Dang. So
it's hard.
How are you digging that out?
Really, a lot of it's going to be research, but Lili and I have both been in the financial industry for over 20 years. So I can usually tell you who bought who because we're following that internally anyway, or we've had clients that we've watched that go. So we add that bit of expertise, and just because we've been doing it for so long. The other is going to be, of course, Google research and just really talking with the client and having them either make a timeline of this is every institution I remember us having, this is every bank account I remember having. So it's involving the client and just involving some of our own knowledge and research.
Okay. Now I'm going to kick this next one to Lili first. And the reason is she put together this slide for us. I'm going to call it a menu array of potential services that clients need. So Lili, you first, if you could pick just one of these tasks or work products to deliver to your client, which one would you say has changed the most, good or bad, in the time that you've been providing divorce consulting services?
One that's, I guess that's changed the most is probably going to be calculations of non-marital and marital and preparing scenarios. And why? Because again, tracing has become much more complicated. We have different kinds of assets now. And if people move from a community property state to an equitable distribution state to a separate property state, you're looking at a mess. Secondly, scenarios. Now we're in alternative dispute resolution, where you are no longer just an advocate, you are a financial neutral, you're an expert who's called upon for objective advice. And you are balancing the needs of both parties and the capacity to pay of both parties. So it's become more challenging in the sense of reaching that pivot on the balance.
How about you, Michele? Because Mel's going to yell at me in a minute or less. What do you think has changed the most?
I'm going to piggyback exactly what Lili said. What she said was perfect. The only thing I'm going to add to it is a lifestyle analysis, because we are, as a society, we like to spend. So we have to figure out, how are they funding that lifestyle? Is it debt? Is it income? Where's the money coming from? So that has changed a lot over the years.
Okay. We're out of time mostly, so I can't hit you guys with questions on that. What I will do is tell people that in addition to, the CDFA and what's the other one that you guys are proud of?
Well, the CDFA is the primary credential from the Institute of Divorce Financial Analysts, and the other one is the National Association of Divorce Financial Planners, which is the not-for-profit membership organization.
Okay. And if looking at our slides here, they can go back to your bios and get the names of the organizations there. Other places to look for research or information, resources, and so on. You have the AICPA, and somewhat the ACFE is also not so much a slacker here. They have some resources, but in addition to that, the limited amount of stuff they have specializing on divorce, they also have comprehensive training in how to do this stuff in a way that's always going to be accepted by the courts. Finally, with regard to resources, Lili's got several books here on her shelf that would probably be worthwhile for your potential clients, or maybe even you folks. Some other assorted resources that we have out here. We've got some stuff from the AICPA and a few other accomplished authors here. And we can all look everywhere we can. On the internet today, there's resources everywhere. But in my view, the absolutely most important resource is a good friend. So I want to thank both of you ladies for joining us today.
Thank you.
And have a great time. Thank you so much again, ladies. I'm going to kick it back to Mel.
Thank you, Cheryl.
Thank you, Cheryl.
Thank you, Cheryl. And thank you to Michele and to Lili for the time today and all the information. And now, so you have your next polling question in front of you, so make sure you respond to that. But now we have another session that people loved, and we're going to have Melissa, she's going to be interviewing our judges, and she's going to be presenting them. So Melissa. We cannot hear you. You're muted.
You cannot hear me, but hopefully you can see my screen, right?
Yes, we can hear you now.
Awesome. So I won't spend a bunch of time introducing my lovely panel, but we do have Judge Driscoll, Judge Platt, and Judge Yates all here. And we're going to be talking about kind of an interesting topic. And we just piggyback off of understanding kind of where divorce is going in general. And I think a very interesting segue to that is that right now we're seeing, and I think the speakers even talked about it, is we have this alternative dispute resolution. And I'm a big fan of mediation, but I think what you see happening in the litigation world is that we are coming in and pulling these like amazing tactics or negotiation strategies or settlement strategies into litigation. So you're seeing a lot more attorneys, judges use these tactics. So I thought it would be interesting to kind of get a perspective from the judges of how we could start as experts settling cases, and maybe they would have some interesting tactics that we haven't thought about. So I usually let the judges decide who's going to start first. So whoever can go first.
I'm usually the shy one of the three of us, so I'll start. And none of us are shy, by the way, but I guess I'm the least shy. And I just want to get back to 30,000 feet on the point about settlement versus litigation. No judge is afraid of presiding over a trial. That's what we're paid and trained to do, and we love it. We loved it when we were lawyers. But systemically, the system needs cases to settle. There are backlogs of years upon years in every one of the 50 states and the District of Columbia and the federal system. And so the only way to attack that backlog is by embracing alternative dispute resolution. So it is something that is embraced by judges at their own level. It's something embraced by court administrators. And I think lawyers are embracing it necessarily because it's the only way to guarantee that your case is going to get to resolution. It is the only way to guarantee your case getting resolution in a way that you can participate, but it also may be a much faster way to get your case to resolution. So I think we just want to start by embracing that construct before we say whether it's a good idea, a bad idea, methods of participation. It is going to be here to stay. It's here because it has to be here. So I just wanted to start by making that.
And Judge, to just enunciate that is exactly what's happening. And so if people think that like these mediation or these alternative ways of operating are not happening in litigation, like they are basically, we're practicing in litigation because we all want to see it be easier, but we have to do some tactics when we're actually in litigation. So you're not immune if you're a testifying expert. You actually have to double down on it. And I think you guys have a perspective from the bench that maybe we could benefit from.
Yeah, I think you'll see the advent of programs like we had in Michigan, where there are severe sanctions if you go to something called case evaluation and you get a number and you do worse than that number at trial. They can take your firstborn, all sorts of things like that. All of that is just a way to strongly incentivize resolution before trial. And as Judge Driscoll says, whether we like it or not, the reality of caseloads coming out of the COVID era is that we have more people who say they want to go to trial than we can accommodate. And so we have to somehow move all those cases along without trying them all.
I would piggyback on what both Judge Driscoll and Judge Yates said. From my world, I would suggest that the experts need to work on changing the legal culture a little bit. When I first started, when I was practicing law, I didn't know what a mediator was until the early 1990s. But now it's not so much an alternative as it is integrated into almost every case management system in the country, both state and federal courts. So it's not an alternative, it's integrated, and it's integrated by rule or statute or both. That said, experts need to talk with their hiring counsel, because hiring counsel is on a budget dictated by a client, and the client and the way that the counsel will often deal with that is, well, we won't involve the expert, or we won't talk to the expert, or we won't therefore have to pay the expert until we know we have to litigate. So we're going to do mediation, we're going to do discovery, we're going to do all of that, and we're not going to involve him or her any more than we have to because we don't want to pay him any more than we have to. That's not a wise strategy. It's not a modern strategy. It doesn't recognize case management principles coming out of the judiciary. And therefore, your involvement at mediations is essential if you are to be of assistance, for the very reasons that both my colleagues suggested. Is we're trying to settle cases because we have to, and we can't do it, and we're not giving ourselves the best opportunity to do it if the person who is going to be key in the litigation, if it has to be litigated, is either unknown or uninformed or both by the parties in counsel. And I will give you the old saying you often hear lawyers describing cases: is this is ultimately going to be a battle of the experts. Well, if it's going to ultimately be a battle of the experts, why are you excluding the one of your principal warrior? And if you're not, then he or she plays a role at the mediation, which so you got to get past that culture change. That's not a legal issue, that's a structural issue. And then what you have to do is, what do you do? What's your expertise, particularly financial expert? You do math. Why did most of these people go to law school or become judges? Because they instinctively either didn't want to or couldn't do math, or convince themselves that they couldn't. You can do math, and you can do it much more credibly in many instances than either the mediator or counsel. And you certainly, by definition, can't do any harm. I continue to be amazed at how often the lawyers have not done the basic economics, done the math with their client, most of whom assume they're going to get their attorney's fees back, and they have no idea what you're talking about when you say the American rule. Part of what the math is telling them what your fee will be if they have to litigate, as opposed to what they are trying to do right now. So again, culture change, structure change, role change is how you begin, but that's just the beginning.
Well, and I think you make a really good point, Judge, about the fact that, you know, part of this is attorneys not bringing in people at the right time. It's a rookie mediation move for an attorney to just take their clients to mediation with no financial expert, but it's happening all the time.
Right,
So,
and that's absolutely, and again, it's them doing fake figures on the math and operating on cultural premises that don't exist anymore and are actually contrary to the interests of their clients. But that's not well established, and not necessarily, and frankly, if the attorney is looking at this case as having to choose between paying an expert and he himself or herself getting paid themselves, that's not conducive to the cultural change we're talking about. And it has to be, they have to be convinced that's not the choice, shouldn't be the choice. And if it is the choice, you should notify your carrier.
yeah.
And so I think the great point that Judge Platt makes, and Judge Yates also said about the changing of the legal system. It's tough to think about changing the legal system, especially when you're not a lawyer and not a judge. But to quote the great legal scholar Woody Allen, 90% of life is showing up, right? So a lot of this battle, from your perspective as financial experts, is letting your retaining attorney know, hey, I can help you if we try this case, but I also can help you before we try this case. What do you mean by that, Madam Expert? Well, what I mean by that is I know that 95% of cases settle because I've gone to these NACFA conferences and the judges talk about the importance of settlement. I'm here for you, retaining attorney, during the settlement process also. Yeah, I'm going to send you a bill for that, but I'm here for you during that process. I'm not just here for you at the end. I'm here for you as you're trying to shape a settlement position. I'm here for you if you want me to come and accompany you with the judge. I think letting the lawyer know, letting retaining counsel know that you're ready, willing, and able to assist, not just for a paycheck, but because it's the right thing to do. It's the right thing to do, that you're there, you're ready to be there. I think that's an important part of this culture shift.
Well,
I'd like to put together two of the points that Judge Platt and Judge Driscoll made to amplify what they're saying. Judge Platt made the comment that if it's a battle of the experts, why leave your lead warrior home? And Judge Driscoll made the point that you as experts should want to be there, even if there's some cost to you. Because my experience has been in running settlement conferences is that if one side has a financial expert at a settlement conference and the other side doesn't, the judge naturally is going to look to the financial expert on one side for advice about all the nuances of valuation. And I can't imagine why anybody who's a lawyer worth anything would want to go to a settlement conference or a mediation where you're going to start with a big stagger to make up because the other side has an expert and you don't have one there. I mean, as a judge, I'd always look first and foremost to the expert if I have a valuation question I want to answer.
Well, and I think some of it's the wrong parties are leading, in some capacity, the experts also have to get involved in discussing expert to expert this complicated stuff. Because quite frankly, if you have two experts that have decent backgrounds and they have been even in your court before, and you have one at $1 and one at $1 million, that's an issue even internally. But how can we start to discuss the numbers at least? Because I don't know if the attorneys or judges are going to know the nuance of why they're different. Or could we do like comparison exhibits or something in some capacity?
I think summary reports filed with something before the settlement conference are extraordinarily helpful. Occasionally, somebody would give me a brief synopsis, and sometimes there'd be a report attached. Boy, would that help me get up to speed in advance. And we have a point of reference for having experts talk, as you say, Melissa, expert to expert. In e-discovery disputes, half the time, the attorneys don't know what's going on. The judge doesn't know what's going on. And yet you have these technical experts who are extraordinarily good at explaining the technology. And so we've learned to lean on them. And there's no reason we shouldn't import that entire way of thinking into disputes about valuation, for example.
Yeah.
Lawyers need to be reminded of what judges tell people who keep saying, I don't need a lawyer in this case. And we usually say, well, and my comment has always been, well, that means if you have an attack of appendicitis, you want me to do the operation, correct? and the answer is no, but that goes to what Judge Yates just said. It's the same thing. People don't think they need lawyers. Frankly, at this stage in our nation's history, I'm not sure they think they need experts either.
Yeah.
The word expert has gotten a negative connotation in some circles. And that lawyers are used to dealing with that. But I think that the culture change is not an easy thing to bring about. And it's going to require the experts, NACPA in particular, and in organizations to have conversations with bar groups. And because the conventional wisdom is it's my fee or yours, and I ain't giving up my fee for you. That needs to change. And it's a disservice to the clients when it doesn't change.
Well, and some of it is everybody has a role to play. And I think that financial people have kind of set on the outside, allowing the attorneys and judge to dictate it. And in some capacity, when we get to this big discrepancy for a business valuation, a judge might come in and say, fine, if you guys can't agree to something, we're going to sell it. But, are your guys' hands tied on the bench that you can't really say, look, this is, are you even understanding any of the facts and circumstances at the settlement hearings or conferences? What are you guys are you just putting fear in their minds or what?
God, I hope not. I hope not. I really, I'm a really nice guy. I think I am, and I can't. My children don't listen to me at home, so I don't know how to create fear. I think the fear, Melissa, might be the fear of the unknown. Is, hey, counsel, you're really going to be able to prove that theory with those witnesses you have when I believe something else to be reality. So I think a lot of what we do in settlement conferences is sort of the bring back to reality. You're saying the business is worth $3.2 million. How did you get there? All right. And, if it's just spidey sense versus, oh, well, I did a discounted cash flow. Okay, great. Now let's get to the discounted cash flow. Let's get to the elements of that. I think it requires a lot of a good settlement strategy for a judge, I think, is to really break down the components of the claim damages or the claim defenses and do some reality testing. Was the mediation word I learned when I first got into this business many years ago. Some reality testing. The fear, I suppose, again, comes from the fear of the unknown, which is the lawyer. I don't think is somebody who needs to be educated on that. I think it's often the client who has to be educated on that at a settlement conference. Sure, client, you know your business and you think the widgets you make are the greatest widgets and you believe they're this incredibly valuable. Well, guess what? You know, I'm the one up at the front of the courtroom and I've been doing this for a bunch of years, and that may be so, but it may not be so. So that fear technique, which again, I wouldn't say fear, but that, you know, there's an unknown. That's something more with judge addressing litigant than it is judge addressing lawyers.
And Melissa, we're driving in the direction that you suggest. At settlement conferences, my pretrial orders always said you have to bring somebody if you have an insurance company with final authority to settle. Or our court rules now say whenever there's a dispute about e-discovery, you have to bring somebody with technical competence. And I don't know why I couldn't, as a judge, say, if we're going to have a settlement conference and a valuation dispute, I want somebody on each side who can explain valuation to me.
Mm-hmm. Mm-hmm. Right. Well, here's a crazy thing, and I know we've talked about this before, but do you ever think that the litigation system or even individual court systems will start getting special masters, or, you know, these court consultants that are valuators that come in and say, here, let me look at the valuation issues. I'll give you what I see as a valuator, because that I think would help a lot in the system.
So I mean, that's a great question. It reminds me of that scene in Shawshank Redemption, right, where Tim Robbins tells the warden, I want to write for some money for some books, and the warden says, son, in this business, the only thing the legislature cares about is more walls, more guards, and more bars, right? So I'm gonna sort of bring that into the present day. I don't see legislatures really opening up the purse strings for adjunct appointments for the courts. So I don't, at least in New York, I don't necessarily see that paid person happening. I see a lot more of the collaboration with the bar as sources potentially for volunteers, or you know, they start out as volunteers for a couple of hours and then they would be paid thereafter if counsel wished to retain them. At least that's the New York experience. I'd be very intrigued by what Judge Yates and Judge Platt might want to say about that.
Judge Driscoll and I had an interesting discussion about this the last time we appeared live at Snowbird, because in some jurisdictions, the court has no authority to appoint an expert to essentially serve as a neutral. In my state, we can do that, although I'm hesitant to do it because I'm imposing more costs on both sides. Because as Judge Driscoll says, our legislature is not going to open the purse strings just to pay for all of this. And so anytime I'm imposing an additional cost on a party beyond the cost of its own expert, I worry about that.
If I could piggyback on that, Maryland has, ever since I can remember, allowed it. I've made those appointments, and I've been the appointed. And the answer is, I think it's fair to say that in the states that allow it, and I'm not sure what's going on in the states that don't, it's expanding. So you give the judiciary that tool, the evidence is they're going to start using it, and they're going to use it, frankly, in the situation you just described. You know, I need help, and I've done it I appointed master in special master. Now they call them magistrates because master has connotations I don't want to talk about. The bottom line is that the end result, I've done it too. I had claims of $15 to $16 million in attorney's fees in a class action case for getting everybody a $5 coupon. I appointed a special magistrate to reconcile the attorney's fees and rejected a settlement because of them. Wow. I've been appointed. The other flip of that, essentially in discovery stuff, but part of that is costs.
Right. Well, and I think a lot of people have offered a lot of suggestions in the chat. I know Michael, you know, wanted to just kind of discuss, you know, as an expert, if there are roles for experts in the settlement process and what NACWA is doing kind of upcoming of how to get cases settled.
In my experience as an expert, when I am at the mediation, when I'm invited to the mediation, or if I send a colleague to the mediation, there is a much greater chance that the case is going to settle. What I'm finding, and what I find in so many cases, is that the focus is on battle, on going to court, on going through deposition, on going into the courtroom and taking the witness stand and fighting the battle there. When if we as experts, if we can assist our retaining counsel in refocusing the focus of the parties, of the litigants, and first it's going to take a refocusing of the attorneys away from battle and into how do we get this case resolved, it's going to do a lot of good for a lot of litigants. I have been in, I remember being in a mediation, a court-ordered mediation, where the parties were on the verge of getting up and walking out and saying, this is a waste of time. And after each side had spent $1.5 million on legal fees and expert fees and all of that. And I just looked up and I said, wait, I've got an idea here. What my idea was, I mean, it was risk analysis, but I explained it to them in terms that they could understand. And I got each and every one in that room actively involved in it. But it took a paradigm shift in order to keep everyone there and get the case settled. We need to do that before everyone starts gearing up for trial. And I think we are in a really, really strong position. Come this December, by the way, for those of you who want to dive into this more in depth, our judges are going to be at the conference, the December conference in Fort Lauderdale. And we have a 2-hour session where we're going to look at it from the standpoint of why hasn't this case settled yet? And what are the things that we as experts could do to be more valuable, to provide value to our retaining counsel and their clients in these cases? Spend the money on coming up with something that is more of a win-win than spending the money on something that we know is a lose-lose for everyone.
And I know we've already gone past our time, and I think that this is great. And I know the costs are difficult, but one thing that you can do as an expert is just offer to be available by phone for the mediation. If you can help them, you can be part of the team and you'll be invited earlier next time. So I appreciate the judges. If Mel's going to give us any more time, that would be great, but I'm sure it's going to be no. But judges, that was awesome. If anybody wants to say something, just talk over Mel. He won't care.
Thanks, Melissa. Thank you to the whole panel. This is always such an informative. I mean, we could do a whole session. That's why the 2 hours in December is going to be amazing. And so I appreciate you taking the time for us and everything. But we are going to move on because we have 2 more sessions to get to before we finished up at the top of the hour. So thank you, Your Honor.
You're welcome.
Take care.
Our next session, we're going to bring on Greg Clark. Greg Clark is a CPA, CBA. He's a managing member of GMC and company. He does valuation litigation support as well as complex damage calculations. He also does business consulting and speaks frequently on this. He's going to spend some time with us talking about some updates in standards and things that will affect how we do practice and try to keep us out of trouble. Are you there? Are you there, Greg?
I am here, Mel. Thank you very much. Is my screen on there for everybody?
We can see it.
All right, perfect.
You got it.
Thank you, everybody. I'm glad I could be here today and kind of have a chance to come talk to everybody about updates and things we've got going on here with the standards board and just try to help make everybody aware of some of new things that have come out, tools and resources that can be used. I know it's kind of often a subject here at Around the Valuation World, trying to help everybody have resources and tools for things. So one of the first things I'd like to update us on is we actually do have a new web page out on the NACVA website. We went through some work. We tried to reorganize that web page. We've got an update to the professional standards, if you weren't already aware, talk about our standards comparison chart, as well as our glossaries, FAQs, and a few other additional resources. So what's going on the standards page? I know standards, everybody says, yeah, I know, I got to follow these things, but really our professional standards are a great resource tool for us because they help us to learn about how we should do our work, what's our process that we should be following. I know if anybody's heard me talk before in a presentation I've given, it's great to use those review standards to help you kind of guide where it is you're going. So if I slide over here real quick, try to give you a screenshot of what has happened here on the professional standards page. What we've done is tried to group everything together to make it easier for you to find. So we've grouped where the current professional standards. There's a grouping now of where our historical professional standards are at, in case depending on when you executed an agreement, as well as our standards comparison charts, our glossaries, and then articles from ethics and FAQs. So it's really a great tool. I know when we were discussing how would we do this, one of those things that we all said was, well, we know the standards are there. They're in a really long list. That's why we took the time to say, okay, let's put them here. Where are the new standards for everybody? So on that point, looking at our professional standards, we actually have an update. So our last standards were issued and effective June 1st for 2017. We now have, and just came out at the NACVA conference that we had, that effective June 1st of 2023, we now have an update in our standards. Really, this update is not a huge change to our professional standards. One of the components we did in it that to me is a key point and point out to everybody is we often hear questions and get asked about that international glossary of terms and what is the right term to use. So now what we've done is down in the section where it defines the international glossary, we've helped and created a link there to those standards terms comparison chart. The standard within our standards, the terms that we as a governing body and as NACMA members use have not changed, but being able to help us as we become more of a global organization, as all of us are doing work in various areas and coming across experts from other walks, facets, and designations, it kind of helps us all to know where we're at and kind of what are we comparing on so that we're able to start kind of talking on those same terms. Next up is really looking at those standard comparison charts, and that is a great tool for as we're doing work. If you're reviewing the work of another ASA or an AICPA ABV member, help us to know these are where your terms fall, these are where their terms or standards fall, and are we following all of the same process? Really can help us as we're reviewing, as well as one of the great things I think this points out to is I oftentimes when I'm in court and get into a battle with an expert or attorneys are asking questions or the judge is asking a question is really to help show our standards across the various designations are actually harmonized. All of us say basically more or less the same thing of what we should be doing to produce our work. We just all say it a little bit differently. Next point is we did do an update to the glossary of terms. So as everybody may be aware, a couple of years ago, there was a new international glossary put out there. It is not the same as the glossary that we've all used for years. So it is a little different. It's not the one that is kind of approved within our standards, but we have that chart now that helps us to see what are the NACVA standards? What did the international glossary, old glossary and new glossary say? What are the terms defined by the ASA or the AICPA say? That helps us in all of those instances. I think from a jurisdictional exception issue, this is a great thing. I know I've had debate with many colleagues and members over, well, what do you do? And if you have a jurisdictional exception, the court tells you what that term is, you're going to use that. If not, then we have to fall back to our standards and our terms. And this is a great way for us to help know what's there. FAQs. And I think the FAQs are a great tool, a great resource, something that we should all be going back and looking at. Those are some of the most frequently asked questions, thoughts, or ideas that we see come in through the ethics hotline or standard boards questions that we've tried to take over the years and explain what are the questions, what does the standard say, and then what is an interpretation to be able to help you understand and apply that. Example I had here is a litigation question. where a calculation engagement may not be appropriate in lieu of evaluation. Are there times that that's appropriate? Yes. Is, discussions of site visits. I know I've actually quoted the FAQ that discusses site visits and whether we have to perform them versus what's disclosed in your report, and trying to help understand, because maybe there's some older caveats, rules of thought, or things like that that may not actually be an application to it. Now, I added a link in here for everybody for the NACVA professional standards. That is a static link. So if you save it every time any updates come or things like that happen, it's a link you're able to do. Next thing I would come to is, I see there's a question that came in before I move on to this next slide here, is the BV appraisal standard comparison charts were updated June 1st of 2022. The standards board is in the process of finalizing the 2023 updates for those. There really are not a whole lot of changes. Most of our fellow peers in the valuation community have everything's in process. So like USPAP hasn't been fully updated yet for 2023, for example. So those are coming. Next thing here, we were talking with our partners in the ethics board and trying to help kind of come up with some of these tools for everybody, helping you all know what's out there for you. If you may not be aware, there's a standards and an ethics hotline. We've included the link here. You're able to call into that or put in a question through that. If you have an issue with another expert or you yourself need help, it's a great way to reach out to us. I've actually put that up here on the site that allows us to have a submittal form to be able to submit your questions. I know part of what we've asked people to do is be able to help tell us what's your issue. Where are you coming from in the standards part of it? Another thing is the ethics complaint. Yes, it's a Survey Monkey link. It looks like this. Gives you the date of the complaint, asks you to provide your information and who you're providing a complaint about, what the issues were and were related to. So, and with that, I will pass it back to you, Mel and Elena.
Thank you, Greg. Thank you for the time today. And now we are you have your next polling question. I know there were some people having issues, but it's there. So make sure you don't close it before responding to that one. And now we are going to go with Dimitri Yimga. He's one of our correspondents, and he's going to be presenting Colin Brown. They are going to be talking about achieve expert status in 90 days with a little help from AI. Dimitri.
Thank you. Thank you for the introduction. And let me launch my slide. Awesome. Thanks. And thank you, Colin, for being with us today to talk about AI and how one can use to be recognized as an expert in 90 days. For those of you who were not at the conference, Colin was actually with us, and it was great. It was a really great topic, and we actually ran out of time. So I don't know, I'll see how we're going to cram this in 15 minutes. Colin Brown graduated from BYU with a degree in business management with an emphasis in marketing. He's a self-taught programmer, techie, and started ThinkNet in 1987 from his college apartment. And while the business has had to evolve as technology has changed, Colin has personally built systems that have processed over 450 million in transactions. Today, his ebizsuite.com CRM software and AI is helping entrepreneurs pivot to our new normal of doing business. Colin, once again, thank you for being with us today. It's a great pleasure to have you.
Good to be here.
So we are running for time. So without further notice, let's dive into it. So achieve expert status, how AI can help you be recognized as an expert in 90 days and boost your authority. Can you tell us more about that?
So actually, yeah, go to that next slide there. First of all, I want to say that everybody is actually on this call is going to be an expert. You're going to be an expert. You've been certified, trained, all of that. The problem is, if you go to the next slide, I don't know who you are. And so it's actually, I don't know your company name. I don't know how to find you. I actually don't know how anybody finds you guys. And the fact of the matter is, it's about being recognized as an expert. And what I did, if you actually go to the next slide, I actually built a framework for being recognized as an expert. I'm actually a marketing guy, and so that's where I focus. I actually, if you go to the next slide, I actually wrote a book on it and created a course on it, and it's got all of these steps in there. However, we have 15 minutes. There's no way we can cover all that stuff. So,
but if you don't mind, you can go over it. We kind of have a little bit of time, and we still have, we're the last one, so there's no one after us there. And I think it's really incredible. If you can, maybe going back to that roadmap, if you can walk our audience a little bit on that, that would be great.
Tell you what, let's go. Let's go to the slide after that, because I'm actually going to I can talk for just a second about one of the elements in all of those 43 elements there. Go to the next one. And it is about publishing. And publishing is probably one of the greatest things you can do to become recognized today. And it's become so much easier. Before, years ago, you had to do all kinds of things to publish anything. And now it's very, very simple. And we have so many different channels to do that. With social media, you can write a book. You can self-publish a book today, which is very easy to do. You can publish it on Kindle. You can also, what I recommend as far as publishing for experts is to actually create an online course. You'll notice some of the best, the experts here at NACD, the experts that have been on this presentation today with ABW, all of them have online courses. And of course, online courses can create passive income. So that's one of the things I recommend you do. You obviously most of you have websites or should have a website. And of course, having a CRM to automate some of the things in there with AI's help can obviously be a great deal of help. One of the things I'm actually going to be doing a deep dive a little bit later, and I'm going to show you how I create social media content, 30 days worth of social media content in 5 minutes. Wow. How awesome is that? Because a lot of us don't have time. We're all in the, we're in the trenches, doing the work. And so to think, just adding this to your plate. By the way, to become an expert, you need to create a bunch of social media content. Well, dude, I don't have the time to do that. I don't have time to write a book. I don't have time to create a course. I don't have time to update my website, let alone anything else. And the fact of the matter is, what I'm going to do is, or what I do is show people how to shorten the time cycle that it takes to do that. And I do that with AI.
So let me get it right. So how do one go, what's the process? How do one go about publishing using AI?
Yeah, so first of all, if we go to the next slide, let's just go a little bit over the strategy of it. By having this strategy of creating social media, having a website, having a book, and creating an online course, all of those things feed into other things. Social media creates books, selling your book, the book sells your website sells your book, your social media sends traffic to your website, and your social media can also sell your online course. Your book can sell your online course. So it becomes this very good strategic way of getting recognized. And of course, I just see a comment, before you hold yourself out as an expert, be certain you are one. Of course, this assumes that everyone is. And of course, I'm going to talk about a little bit about that in the next session. But in any case, you do obviously have to be an expert in what you're doing.
So,
go ahead.
Yeah, let me get that right, because I'm still kind of learning that, of writing, let's say writing a book using AI. And as an expert, how do you make sure of the authenticity? I mean, if you're letting AI write that book all together, and again, I'm still, do you just go on a prompt and say, write a book about this, and you just feed the whole thing and that's it?
Right. So obviously we can't do that. I mean, you could, but I wouldn't recommend it. First of all, AI isn't perfect just yet. It does give false positives as far as it could actually give you actual information that's incorrect. So whatever you create with AI, you still need to obviously edit it and make it yours. And you can do that by adding stories, your personal stories. But a lot of the content that's being created, once again, it's a large language model, and it's got over 100 trillion, sorry about that, 100 trillion data points. So the information that it kicks out can be very good, but it's only going to kick out information based on what you input to it. So becoming an expert in prompt engineering, which is one of the things that I teach, is going to help you get more out of it. A lot of us right now, you may have gone out there and you've tested it. You said, write me, a social media post for LinkedIn on the topic of financial litigation. I'll just make that up off the top of my head. Now that's going to give you something. It might be good enough. Probably not going to be good enough. The prompts that you need to engineer have to be structured in a way so that you get better results. So you wouldn't use necessarily the AI completely to help you write to write the book, but you would use it to help you write the book. And ideation is probably coming up with the ideas. Sometimes you get stuck in front of a screen and don't know what to talk about or even to say. And definitely AI is helping everyone come up with at least the initial idea and the concept. I know that Chris Mercer in his presentation at Snowbird even mentioned that he used AI in his presentation, and it actually gave him a point that he hadn't considered prior. So it's definitely helpful in that way. But it's just gonna shorten the time. You still have to put in the work. You still have to be an expert. You still have to know what you're talking about, yet to know if the result that it gave back is actually legitimate. So
yeah. So quick question actually, and last time I thought about it, but so I know you're talking about ChatGPT. So what about Bob from Google? Like the prompt you're teaching also applicable for that, or what do you even think about that alternative as well?
Yeah. So and Bard's not the only one. There's actually quite a few that are popping up, and they'll continue to pop up. And as Mel just mentioned here, you still need to add independent thinking to make it yours. Absolutely. I'm just going to say what you have to do is you really have to do your own testing to find out what results you get, and then of course you've got to make it your own, like Mel says. And I actually, sorry.
No, you go ahead.
I was just going to say in my presentation later, I'm going to, when I go into this more detail, we just don't have a lot of time. Yeah. I'm going to give you some alternatives of some things that you can look at for helping you create content.
And so basically what you're saying is pretty much use AI like an assistant. Let's say an assistant preps some work and then you review and make sure it is as the expert that he actually is what you're shooting for.
And it's going to give you some ideas, maybe some things you hadn't thought of or considered, and that's a good thing. The actual results may or may not be good, so you do have to put your own spin on it. And I always, when I try to create something, I'll actually put an actual story from my experience as a consultant for the last 36 years of how that concept is applied. So
great. So overall, what you kind of went to, and you also spoke about, I remember the conference, Chris Mercer also mentioned that, but I want to see your thought on that. What's your outlook as far as what AI is doing in our industry? What do you foresee is going to be happening?
Yes, so that's the cool thing is I am foreseeing that we're going to eliminate a lot of the software solutions that currently exist out there today for the business valuation community. In fact, I'm considering, if someone wants to partner with me, I'm considering buying some software that will basically gather in data that's available. It's obviously going to be public data because private data is harder to find, and summarizing the data. We're talking about petabytes of information and summarizing it in a very fast way. And so they claim that within by 2030 we'll have I can't remember what they call it, but we'll have basically a super intelligent model by then, and it will be smarter than all of the smarts in the world. So it's happening very fast. Even the stuff that I'm trying right now, it's literally changing day to day. So I haven't even changed my presentation from the Snowbird presentation to the one I'm going to give today, because things have changed and continue to change, and it's crazy to even try and keep up with it. But anyway.
And then again, expert people went to school, they had to take certification and all that. What's the impact of such thing now when it comes to education and all that? I mean, if someone can maybe sit at school and just go through something like this and be able to, ace any class. So, I mean, what's your thought? What do you think this could be somehow regulated, or maybe even, because that's the fear is really and I think there was a case of a lawyer who actually used ChatGPT to write something for a case, and then I don't know if it was a he or she, got in trouble for that. But again, so what do you think? What are your thoughts on that?
First of all, it's very easy to detect something's been written by AI. So you can put it through a detector, I'll say, and it will come out and tell you how much was probably written by AI. However, AI is getting smart enough, and if you structure your prompt well enough, you can structure it to say, vary the length of sentences so that it sounds more humanistic. That's an example to get around that. So people think, are going to be able to get around that. A lot of universities right now are actually embracing it and saying, you know what, it's there. We can't put that cat back in the bag. So we need to come up with policies about how you can use it. And so that's, I'm not going to be the one to debate the ethical or moral reasons of using it or not using it. I will say that it's here to stay, and I don't think that we can change that. And so trying to figure out how you can best use it is going to be the goal for pretty much everyone. Here's an example of a slightly more complex script. I'm going to show you some super complex scripts in my presentation later, but you can just take a look at that. You could go ahead and copy that and see what you get out of it. It's very, very cool. Anyway, so the last step I have here in my presentation today is some of the steps you could take to be recognized as an expert. These are some shortcuts. There's obviously a lot more to it, but if you get good at prompt engineering, that can actually shorten the time of you creating all the content that you need to be able to do to be successful and be recognized. Since all of us don't have a lot of time to sit there and post on LinkedIn every 10 minutes. And then, of course, it's a good idea. So you update all of your social media profiles. I highly recommend that you have some type of giveaway, an ebook or white paper that you can use lead magnet to capture leads. I've been reviewing a lot of CVA sites, and a lot of them do not have a good way of capturing leads. They're basically a brochure site. So that's one of the things you can do to start capturing leads. I also recommend that you write a book for your target market. So that's not for other CVAs, it's actually for the target market that you're interested in targeting. And then, of course, I recommend that you set up a personal website with some type of online sales process, and and then create 30 days of content for social media and write an article for your association in the industry that you're targeting. If you can do those things in the next 90 days, those few steps, I know there's a lot in there and it's probably a little overwhelming, but it definitely can help you be seen and more recognized as an expert in your industry.
And there's a comment from Meryl that sites need to be credible.
Yes.
Communication and commercial, yeah.
Those are all very, very important things. The last slide, I just, for those of you who may not be making it to the next one, I have created a free training for NACFA folks. It is a chat GPT prompt training, and you could grab it if you go to syncnet.com/NACFA. And for those who are going to make it, I'm going to show you a whole bunch of other stuff that you won't see in that. But anyway, in 60 minutes, I can make you pretty much an expert in prompting with ChatGPT. So
yeah, thanks, Colin.
Fantastic.
Sorry, this is Chinda real quick. Just on the next slide, Dimitri, anyone who is joining this AVW webcast is eligible for a 20% discount. So click on that link below and use that promo code, and you can join Colin's session later today.
Super.
Fantastic. Colin, like always, a pleasure. Thank you so much for giving us your time. And everyone here with us, thank you for being with us.
Thanks. Have a great day.
Have a great day.
Thank you, Colin, and thank you, Dimitri. And thank you, everyone, for joining us today. So we are inviting you to attend the next month broadcast. It's going to be September 18. So make sure you participate in that and you put it in your agenda. So